Hi everybody, and welcome to this wonderful webinar on the fundamentals of the Audio-Visual Expenditure Credit. First of all, I'd like to say thank you for taking some time out of your busy diaries to listen to this webinar. We'll try and make this as informative and insightful as possible. I'm Barry Dowsett. I'm the CEO here at Myriad. And apart from my CEO duties, I also get involved with AVEC claims, typically at the start of the process, which is to do with the structuring, the corporate structure, the tax planning and the modelling. And I also get involved helping our tax compliance team with any unusual requests or technical issues relating to audio-visual expenditure credit claims. Just introduce my colleague, Chris. So Chris, like to introduce yourself?
Hi, I'm Chris. I'm the Tax Incentives Manager here at Myriad. I specialise in the creative industry sector's tax reliefs and expenditure credits. I've been doing that now for around about 8 years or so, helping our clients deal with the BFI applications, the detailed trade costing schedule to make sure all the claims are optimised and that they go through as smoothly as possible, doing that for clients with claims where they're getting benefits in the tens of thousands, if not up to the millions.
Okay, it's wonderful. Thank you, Chris. So let's just go through what we're going to cover today in this webinar. First key thing here to say is this is actually a fundamental. So we'll try and keep things as basic as possible. So the typical areas we'll cover is, of course, the first one, what is AVEC, who qualifies and who doesn't, the core criteria that you must meet, how much you can claim. I will go through a simple step-by-step example, as this is a fundamentals webinar, keep to the basics. And what we have is cover our colleague and monitor any questions that come through live. And at the same time, we've had a few questions that have come in prior to the webinar, and we're trying to answer all of those at the end. As I said, this is a fundamentals webinar. I will touch on some point about some of the complexities that we have, but I will certainly just touch on those, and we'll cover that at a further webinar, which will come in, I believe, the middle of October. So yeah, so hang around, wait to the end, because there are a few complexities that I'll quickly run through. So the first question is, what is the audio-visual expenditure credit? Well, it covers film, high-end TV, kids TV, and animation productions. And I must say, this is a generous government incentive to support the audio-visual sector. It's actually a UK government scheme, and it is administered by HM Review and Customs. And there's a specialist team at HM Review and Customs in Manchester that administer all creative sector industry applications. Now, the headline rates, which I'll talk about later, are published, but in the net effect, the benefit that this gives is that it's between 20 to 32% of the net benefit. So that's your core production cost. You will receive somewhere between 20 to 32%. And then because you have to factor in the corporation main rate deduction of 25%. Okay, so what has changed? Well, previously we had the film, high-end TV, animation and children's tax relief as separate creative sector reliefs. And what AVEC does, it brings it all under one umbrella. Now, generally speaking, the AVEC applies to, I think it's the 1st of January 2024, but independent films, it's expenditure for the enhanced AVEC, which is from the 1st of April 2024. And the key difference here is that the income that is generated, so imagine this has been income from the government, is taxable income. So it's something that appears what we would say above the line. So it's recognized in your revenue within your business, but you've got to remember that it is actually taxable either at the small company profit rate or the main rate. Rather than the previous scheme, the relief was through an adjustment to the taxable profit and losses and somewhere buried within the tax computations. One of the things to point out here still, though, is that you still need to report by trade. So every production has to be reported by trade. So tax computation from that perspective, unfortunately, not getting any shorter. You can claim UK activity costs only. So there's a couple of things that also came about. So you can't claim for EU costs. It's got to be UK activity costs. And I've also removed the 1 million subcontractor limit. Now, the idea of AVEC is to simplify and unify the creative sector's tax incentives. However, when the government or HM Revenue and Customs say something's going to be unified and simplified, unfortunately, that's not all the case. And I will, as I said, I'll pick on that a little bit later towards the end of this webinar. Now I'm going to hand you across to Chris, and Chris is going to let you know who is eligible for AVEC.
Thank you, Barry. Yeah, so to be eligible for AVEC, first of all, you need to be a UK corporation company registered under UK Corporation Tax Net. So you've got to be paying or at least subject to corporation tax to be able to be eligible. Your company must be responsible for pre-production, production, and the post-production of the project that we're talking about. And that also includes actively planning, deciding, and negotiating on contracts. All the costs need to be going through that limited company to make sure they're eligible costs that we're actually receiving. To ensure that your production qualifies, you're also going to need to get it certified as British, and that's all done via BFI. So if you're a single British production company, so it's just yourselves involved in it, then you would apply for the cultural test, and you can either get an interim certificate whilst you're in production, or at the end apply for a final certificate, which we'll cover slightly later on in this slideshow. The other alternative, if you have a co-production partner, so if you have an Indian co-production partner, for example, you can actually apply as an official co-production. We're not going to go too heavily into that today because there are 12 bilateral agreements as well as the European Convention of Cinematic Productions. However, the important thing for you to note about getting certified as a co-production is you need to have your application to BFI at least 4 weeks before principal photography starts. The other core criteria to qualify is that at least 10% of your costs must be based on UK activity. So what are the core conditions? Well, first of all, let's look at film. So for film, it's got to be intended for theatrical release, and that means release in a commercial cinema in a format that's suitable for them and also the type of film that you would expect to see within a commercial cinema. HMRC, if they have queries, may also ask you for more information about your intentions. So you should have a plan that shows that you're planning to get at least 5% of your income from that release. If you're interested in the independent film tax relief, then there are some modifiers that actually also need to be dealt with for that. So the first one is the modified creative connection. You need to have a British or UK screenwriter or director on that crew, as well as a budget, a core budget that doesn't exceed 23.5 million. You'll only get the enhanced relief on the first 15 million. And the other thing to note is if you are going for the independent film tax credit when applying to BFI, you are going to need an accountant's report, regardless of whether it's an interim application or a final application. Next, we have high-end TV. So with high-end TV, it can be a drama, a comedy, or a documentary, but it excludes things like quiz shows, game shows, panel shows, etc. There needs to be an average core cost that's at least £1 million per hour slot length. So that's so important. And the slot length must be more than 20 minutes per episode. If you have multiple episodes in your series, you can get those treated as a single production if they're commissioned at the same time. So you would only need to apply for one BFI certificate and you can report that as a single trade. There's also children's television, so it's similar to high-end television. However, it doesn't have the core cost requirement and it doesn't have the minimum slot length. Interesting to note, with children's television, it is possible for a children's TV quiz show to qualify so long as prizes across the whole season don't actually exceed £1,000. And for it to be children's television, the primary audience must be 15 years or under. And then finally, when we look at animation, well, animation is always an interesting one because it can be either film or TV. And animation specifically, you need to have at least 51% of your core costs spent on animation. So it can actually involve live action in it, but obviously the majority of the costs need to be spent on the animation. And with any of the TV programs, it's got to be intended for broadcast on TV or potentially over the internet as well. So there are the broadcast requirements, and that needs to be the intention. Okay, so let's talk about BFI's cultural test. So as a single production, you're going to be applying to BFI to get your certificate, and BFI can offer two certificates. So interim certificate, which I mentioned earlier, is for when you're still in production. I often see that when we have clients that have actually done probably the pre-production phase, they've done the principal photography, and now looking to release some of their funds that are tied up in their tax reliefs so they can actually pay for the post-production. That's typically when we would apply for an interim certificate on their behalf. An interim certificate is valid for up to 3 years from the date it's issued, and if you do receive an interim certificate, you are going to need to get that ratified as a final certificate at the end of the process to ensure that the production still qualifies. Now, the BFI application process, depending on what we're applying for, you're going to need 18 out of 35 points for film and TV. For animation, it's just 16 out of 31, and you gain those points over 4 different sections. Section A is cultural content, so that looks at where are the locations, where's this story set, who are the characters, are they British or EEA nationals that are being actually featured in this as a location or as individuals, and also who wrote this and what language is this actually originally recorded in. Section B talks about the creativity, heritage and diversity and how the production actually relates to British culture specifically. Section C, cultural hubs, is where have you spent the money? And Section D are the cultural practitioners. So who's actually been involved in the project? Are those UK or EEA citizens or residents? Now, a question that I get asked quite a lot on this is, well, how do we qualify? How do we actually get our points, especially if we've got something like let's say a science fiction film? So nothing's set in the UK. It is being made by a British production company, but there's no setting in the UK because it's in outer space. There are no characters that are actually EEA nationals or so on, but it will still qualify. So let's just run through that then. So if it's set in outer space, obviously no points for location or characters potentially. However, if it was written by a UK or EEA citizen or resident, we'll get 4 points there in Section A straight away. If it's recorded in English as a first language, so at least 75% of the recordings in English, then we'll get an additional 6 points. So we've already got 10 points there. Let's, for the sake of this example, assume that our director, producer, composer, cast and crew are all made up of UK and EEA nationals, so we can actually maximise now all 8 points required in Section D, and that gives us the 18 points that we require to actually pass a cultural test. We will require the accountant's report for Section D, but that's exactly how we can pass that test. So if you're making a British production, you should be able to qualify. Okay, so I'll hand back to Barry, who's going to take us now through how much the AVEC is actually worth.
Okay, thank you, Chris, for that. Yeah, so how much is AVEC worth? Well, the figures that I'm going to show you now on the screen are actually what I call the headline rates, the gross rates. So film and high-end TV, 34, animation and children's TV gets a little bit more at 39, and the independent films actually can claim 53%. Now, I did say they are the headline rates. What you have to understand is that is your gross income, that's revenue, that is taxable. So already that's going to be taxed at 25%. But when you talk about the fact you can only claim 80% of total core costs, or the amount of UK costs, whatever is the lower, then suddenly these gross headline rates become obviously less. So it's 80% of your core costs. You then apply the percentages, the gross percentages to those, and then obviously that's subject to corporation tax at the main rate, which is 25%. So what you end up with are net figures for film and high-end TV is just over 20% at 20.4. Animation and children's TV comes to 23.4, and independent films is 31.8. So that is of your core expenditure. That is what you will physically receive as a benefit from the government, which is, as I said, from HM Revenue and Customs, who administer the scheme. Okay, now what you can claim for, I'm just going to pass you across now to Chris.
Hi, thanks, Barry. So yeah, Barry's covered how much it's worth. So what is it that's actually based on? Well, first of all, what we're looking at is the core expenditure. So the core expenditure is made up of the pre-production costs principal photography, and the post-production costs. So pre-production is typically seen as being when it's no longer a speculative project. So the intention is now to get that made, to get it shown in cinema, to get it shown in cinema or for broadcast or for streaming. So the intention's now there, and now we enter into the pre-production phase. So we're going to be talking about things like securing locations, studios, the forecasting, rehearsals, etc. for pre-production. Principal photography for film and TV, that is obviously the filming, and the filming for animation, it tends to be the rendering stage when you're actually now committing that project into the render. And then obviously we've got the post-production phase, which is also eligible. So editing, VFX, etc. It's also important to note at this stage now, there's for UK VFX from the 1st of January 2025, there's actually an enhanced rate that can be claimed, which is 39% of the VFX costs, and the 80% cap is actually removed for UK VFX. What we can't claim though for is for the development costs. So development costs are typically the costs prior to the project being greenlit. So specifically, we'd be looking at things like script development. So first draft of a script or pitching the initial ideas would not be qualifying, nor would things like financing and other activities that take us up to being a greenlit project where the intention is now to get that made. Other sections we can't claim for are things like commercialization. So by commercialization, that will include the financials, sales, distribution, publicity and promotion. So your press junkets at the end, they're not going to qualify, nor is any cost for raising finance at the beginning of the project. So it does focus in on those core expenditure costs. But what a lot of our clients miss when we talk about core expenditure are things like the overhead costs, which can be brought in on apportionment basis. So what if you're running a head office and have head office staff supporting this, we can potentially claim for those on a fair and reasonable basis. Okay, excellent. So I'll pass over to Barry now, who's just going to take you through a calculation of AVEC.
Thanks, Chris. Yeah, so calculating AVEC, I'm going to present to you a very simple example, as this is a fundamentals webinar. Unfortunately, all the examples that we see are typically not simple. So in this particular example, and this is just so you get the basics of how the calculation works, we're going to take a high-end television production company. It's a single production. It's the only thing that this entity actually undertakes. It was completed in the accounting period. So it's just 1 year accounting period, so 12 months. The total expenditure incurred is 1.4, of which the core expenditure is 1 million, and that was all in the UK. Now, the key thing here is that if we could just split the two, so we've got this area at the top, and just treat this as being a normal profit and loss account and taxable position. So you've got income, which is from the commissioning costs received from the broadcaster of 2 million. Core expenditure, as I mentioned, is 1 million. That's all UK. Non-core expenditure 400,000 gives you a taxable profit of 600,000. Apply the corporation tax rate at 25%. You end up with a corporation tax liability of £150,000. That's the first part. Now, just remember that audio-visual expenditure, the government incentive, is gross income. So that should, in theory, be reported in your profit and loss account as gross income, and therefore is subject to tax. So what you can take is 80% of the core expenditure. We've already said that's 1 million, therefore it's 800,000. You then apply the gross income percentage, 34% for AVEC in this particular case, for the high-end television production. As I said, these are the headline rates that they published, so that gives you 272,000. That is subject to corporation tax at 25%. And the tip here is that I do see many tax computations that are presented to me that do not show this as being income from a tax perspective. You have to show that as being income because it is subject to corporation tax at 25%. So that's 68,000. So the government are due to pay you £204,000 of audio-visual expenditure credit. What HM Revenue Customs would typically do is, of course, they'll net the two off, and therefore they'll pay the balance of 204 less than the 150,000. So we end up with the £54,000 there. Now, I'm now going to explain. I said this is a simple example. As I said, it's very rare that we actually see these. So what we tend to come across is that we have some complexities, and the complexities start off in that you will have a company, an entity that has multiple trades. So every production is a separate trade and needs to be reported as such, which makes the tax computations very long. You then also have completed and non-completed productions. So it may be that you want to claim for a completed production because you've got the final certificate, or you also want to make a claim for non-completed because you've got an interim certificate. What all this boils down to is that you have trapped losses, and also therefore your AVEC cash benefit because of the trapped losses can be delayed. And that's simply the fact that you will receive your AVEC over a number of accounting periods because those losses are trapped. So there is a solution to that. I'm not going to go into a huge amount of detail, but I will just quickly touch on that. And that is that you set up something called SPVs. So you have a corporate structure where you have a parent organization. An SPV is simply an entity that is solely there for, in this particular case, entity used for that particular production. So it ring fences the costs in that production, and you can have all kinds of chargebacks, etc., or commission costs back to the parent. And the idea behind this is that you do avoid that trap loss position. As I said, I'm not going to go into a huge amount of details, and I believe that the next webinar we'll hold in middle of October will actual fact really focus and drill down into this area. But yeah, unfortunately, we still have these complexities that the Audio-Visual Expenditure Credit brings to us. Now I'm going to pass you back to Chris, who's going to talk to you about making your claim.
Yeah, thank you, Barry. So obviously this is about the order of preparation. So we've spoken about the scheme, but how do you actually go about making that claim, and what is the order that you should actually get things prepared in? So the first thing to get prepared is the costing schedule by trade. Some of you may have already downloaded our spreadsheet costing template, which is available, that we use. It deals with up to 20 trades as a default over 20 years. So it's a quite complex spreadsheet that actually breaks it down into finite detail for you. And the reason why this is important is because BFI are going to ask you questions in the application which relate to the total costs, the core expenditure, and what is the UK expenditure, but they're also going to expect you to provide with the application. For an interim application, they're going to want a budgeted cost report, and for a final application, they're going to want the actual cost report, and they want it broken down line by line, and our spreadsheet will help you do that. Once you've got that spreadsheet completed, so you've got your costing schedule completed, you can then actually look at dealing with your certification with BFI. So that's an online application via BFI. You're going to have to prepare quite a bit of information, answer those questions, apply for those 18 or 16 points that you need. There'll be questions that they'll ask to help ratify and understand why you believe you're due those points. Depending on how you get those points, you may also need to get an accountant's report, which has to be provided by a registered auditor as well. And BFI do have a link for the list on their website. And once you finally submit your application to BFI, you need to be aware that they're going to take about 6 to 8 weeks. That's our current reporting time for actually going through the process of ratifying it and then getting it certified by the Department of Media, Sport and Culture. And a little tip for you guys out there, if you really are on a time crunch, well, BFI actually send their recommendations forward on a Wednesday. So if they ask you questions on a Monday, get it to them on the Monday or the Tuesday, so your application can go in on the Wednesday, and then you should receive your certificate the following Friday or Monday. Once you've got your certificate, that's when you can actually now look at putting forward that claim. So the first thing in the claim order is you're going to actually have to submit your additional information form. Now, the additional information form is something they've introduced in recent years. It needs to go in before the amended or the original company annual tax return, and the information they're going to be looking for on there will be things like company details, some general information on the production itself, as well as details of any connected parties and some overview information on the expenditure details, so that must be submitted first, otherwise any claim won't be valid. But once that's in the case, you can then submit your final tax return and tax comps for HMRC, and then just sit back and wait for your benefit to come in. Okay, so
that's
now,
great. Thank you, Chris.
Thanks, Barry.
Yeah, so now your question's answered. What I'd like to do is bring one of my colleagues in, because I believe there's some questions that we've had prior to the webinar, and obviously we can go through any of those that have come through during the webinar. So just bring, hi Kale.
Hi there, guys. Thank you very much, first and foremost, for that, that awesome explanation of AVEC. As you're aware, we obviously did put a question out just to people registering for this webinar, just if they had any burning questions around AVEC. We did get some questions beforehand, so I'll just fire off the first one. My production has been filmed over several years. Could you talk me through how to make a complex claim? Thank you.
I could answer that one. Okay, first of all, you've got to obviously, if it's been completed, you have to go for a final certificate. But what you'll find is that you can make cumulative claims. It's very common. You wait for your final certificate, and that therefore that's over many accounting periods. So obviously you would take take into account all the costs that you've incurred when you make that application in that particular accounting period. One of the things that will happen though is that HM Revenue and Customs will do what's called a discovery assessment. So it wants to see what the position looked like for each of those accounting periods, so those costs were actually incurred. And they just obviously want to make sure that if there's any tax due for those prior years, that's taken into account as well. It's something which we do at Myriad. We kind of we do like what's called a pre-discovery assessment, which we then inform HM Revenue and Customs that we've performed that service. It just makes sure that the claim goes through smoothly without any issues or problems. But yeah, cumulative claims is very, very common. But you've got to obviously be mindful about this discovery assessment for prior accounting periods in terms of the tax.
Fantastic. Another question we have here is specific to high-end TV. Does a slot length incorporate time for advertisements or not?
Yeah, I'll take that question. The answer is yes, it does. It actually incorporates the time that the broadcaster allows for advertisements within that slot length. So we're talking about, when they refer to slot length specifically, they refer to the length it fills within the broadcaster's schedule. So a 20-minute slot length might actually only be a 15-minute runtime because there's 5 minutes of ads throughout the show. So that would be fine.
Okay, awesome. I think this is another one for you, Chris. You mentioned overhead costs. How do we apportion overhead costs in our claim?
Oh yeah, thanks for that. That's actually a really good question. So overhead costs can be brought in a number of ways. The most important thing is it needs to be on a fair and reasonable apportionment basis, and it needs to have a logic applied to it with calculations that can be visible to HMRC and that they can understand. So for example, if we take general rent, is a great example. Typically, we would base that on, say, the director's time if they're an employee, or the producer's time if they're an employee of the company, within those qualifying phases of pre-production, principal photography, and post-production. So we'll look at that time spent on those phases, see what that's like as a cost compared to costs over the whole period, and that becomes the apportionment and ratio that we use in that circumstance. And a lot of our clients actually, when they come to us in their budgeting, haven't taken that into account. They don't think they can actually claim overhead costs, and on that basis they can. And quite often that actually gives a very significant uplift to their claim value, and that's what we do. We go through, we actually make sure no money's left on the table, make sure that it's robust, and that those costs are actually dealt with in a way that HMRC will understand.
Awesome. And I'm just going to head to one that has come through now on the call. And I would again just encourage anyone, you will see at the top of the Teams meeting there's a Q&A button, so feel free to click on that and submit your questions there, and we can answer them live on this call. But we have had one come through now. Can I put in additional information after the tax return is submitted?
No, the additional information form specifically has to go in prior to that. If it's not in, then your claim's not valid. If you're within the 2-year window to actually submit an amended tax return, I would advise that you then submit the AIF and then submit an amended company's tax return that claims back the creative industry tax relief that you're after. And that is true for every single creative industry tax relief, not just for AVEC, for the video games, for the cultural ones as well. So AIF needs to be in first, and then you submit your CT600, effectively the submission to HMRC.
Okay, fantastic. We have had another question come through. I'm setting up an international independent feature co-production. Should I be looking to apply for standard AVEC certification or the IFTC? Which would be the best route?
Okay, I'll take that question as well. Well, that really depends on your budget for a start. So you're only going to qualify, as I covered earlier, you're only going to qualify for independent film tax relief if you've got a British director or screenwriter and your core expenditure is 23 million or less. If that's the case, absolutely, if you can, apply for the independent film tax credit, because it's a much higher relief rate. Yes, you've got a couple of extra hurdles to jump through. So when you do your interim application, you are going to need to find a auditing accountant that's prepared to work with you to produce that accountant's report. However, as I say, BFI do have a list of those available to you. We actually work in partnership with an auditing accountancy firm that have actually audited our process and are happy with how we do this. So we're able to do that if we take on the claim for you. But if you're doing it yourself, it's still worthwhile doing if you can find your auditing accountant. So if you hit the triggers for the independent film tax credit, absolutely go for it.
Okay, perfect. The questions are coming through thick and fast live now, guys. So we've got another one here. If we take legal costs in regard to qualifying overheads, do legal costs incurred on drafting the co-production agreements signed in advance of the prep count as qualifying? Do legal costs incurred on closing also count?
I mean, that's a very specific question. Generally speaking, no. And that's the best answer I can give you at this stage. If we want to get case specific, we can always arrange a chat after this to look through it. But generally speaking, it sounds like it's a development cost at the start of it. So specifically, those kind of legal costs are actually excluded, and you'll find that within the manual for HMRC, and typically any commercialization cost at the end is also excluded.
Okay. Awesome. Okay, I'll move back to some of the questions sent in beforehand. Again, guys, if you've got any questions, please do submit them now on the call. Do HMRC make inquiries into AVEC claims? And if so, what does that typically look like?
I can answer this one for sure. So, of course, they have the statutory right to make a compliance check into any part of your tax return, which does include the Audio-Visual Expenditure Credit element of that. And in terms of what it looks like, you would receive something in writing asking for information, additional information, and they will then, once you've replied to that information, they may ask you further questions. Now, of course, making sure that you answer those questions in a timely manner, providing full detail is important, which is obviously something that we already do prior to obviously putting the claim in for Audio-Visual Expenditure Credit. I suppose unless you are putting something forward which is deemed to be careless, you kind of, normally they're quite understanding, HM Revenue and Customs, but if you're being careless and you're not taking the appropriate advice and inflating costs which are not supported by arm's length pricing, etc., you could get yourself into some difficulties. But generally speaking, the answer to that question is yes, they can, and it goes through a formal process. So yeah, I don't think there's anything to worry about if you've got your preparation and your calculation done correctly and your tax computations done correctly as well.
Awesome. And another question, how do I know if this is worth my time?
Do you want to answer that, Chris?
Yeah, I mean, that's a really good question. The simple answer is speak to us about it, I suppose, in a rather cheeky manner, because we'll actually help you explore that in more detail. That's what I get involved in with a lot of our clients. Barry's already explained as part of this webinar what it's worth per pound core expenditure. So the real question to you guys, is it going to be worth your time to invest in doing that process to get it back, to get that money back? So typically, if we're looking at core expenditure about 100k, you're going to be looking at somewhere around about 20 grand back per 100k you spend. So the answer is that a significant sum of money to you? And will it help you fund future projects? If so, I would suggest it's worthwhile looking at. I mean, obviously there's an investment in time, but it's still a significant cost that you're going to get back.
Perfect. Well, that's it, guys. That's all the questions that were submitted beforehand. We've not had any more questions come in live on the call, aside from the ones that I've already mentioned. So, yeah, feel free to move on to the next slides. And
Right.
thank you, everyone, for submitting their questions.
Thanks, Kale.
Great, thanks, Kale. Okay, so obviously we're just coming to the end of the webinar now. I've got Chris's email details up there, and also myself. So Chris, anything to do with the creative industries, so to typically anything to do with BFI application and some of the costing work and supporting documents for BFI or even the tax will be Chris. Anything to do with the what I call the preparation work, the planning work, corporate structure, tax planning stroke models, etc. And also I give support to our team. I can certainly pass that across to our in-house tax experts. You've got my email address there. Feel free to reach out to us. We like to support as many audiovisual companies in the creative sector as possible. That's what we're here. And I would like to just jump onto the last slide, which will be the next AVEC webinar, which is where we go for a bit of a deep dive here in terms of how to structure AVEC claims for cash now, not later. I did mention there's an issue with trapped losses, and there are ways around that to ensure that you don't have funds trapped for a number of years. And I think you can accelerate that and bring it into year one. And I'll talk about the structuring process of that, how the funds move, and also some of the legal frameworks required to put that into place so you get your full AVEC benefit sooner rather than later. That's on the 14th of October, and that one kicks off at 10 o'clock. So yeah, that's a coffee one. Grab a coffee, come along to the 14th of October. We will send that invite to all those that registered and attended this webinar. And I look forward to seeing you all on the 14th of October at 10 o'clock. So it's a goodbye from myself and Chris.
Thank you very much for listening.
Yep, I hope you all enjoyed it and it was informative and insightful. Thank you very much.